Richard Harris is now joining us. He's Chief Executive of Port Shelter Investment Management. Richard, good to have you with us here. Thanks very much. Are global markets going to continue to do very well, Richard? What's the chance? I mean, US specifically, let's start with that, where the Nasdaq is up 30% for this year, whereas I think the S&P is far behind. If you look at an equal weighted S&P, that is actually, I think, absolutely flat for the year. I mean, I'm talking about equal weighted market cap wise. But of course, because of the large contribution from large cap tech stocks, even the S&P is up about 9 or 10% for the year so far. But do you think it'll broaden out and we'll get more rallies here?
Well, it's difficult to say because, of course, the reason those particular stocks have done well is the AI narrative. And the AI narrative has really meant that stocks like NVIDIA and the Googles and the Apples of this world have done actually very well because they're seen to be particular beneficiaries of AI. If you look, in fact, it's interesting, if you look at the other end of the market, something like 30% of stocks are below 10 times. So you've got this massive diversity in the market. And yes, you're quite right. The market really, if you look in different measures, has flattened off a lot. But, a profit is a profit and it makes people feel good. And I think the AI narrative will continue for a little while, but it seems difficult to see with something on such a long-term spectrum that it's really going to be sustainable.
Richard, hi. Good morning. So, what we're also seeing is central banks sending out a pretty loud and clear message, right, that we're not done yet. And we're seeing that from around the world, whether it was Australia earlier or Canada, now the Swiss National Bank or the BOE yesterday. So what's your sense? I mean, how soon can the markets price this in? Because just about a month back, there was a lot of expectation of perhaps rate cuts this calendar year itself. Is this a new negative for equities, or can equities take it in their stride, thinking that, okay, maybe it's an indication of underlying economic strength?
I think that the interest rate threat has always been there and it's continuing. I think what has surprised people is that we've seen a lot of strength, say, in labor markets, because people want labor and there are various reasons why that's the case. But we've seen a lot of strength there. We haven't seen the kind of recessionary unemployment that we might see. We have seen recession in a few countries already, technical recession in Germany, and yet the labor market has remained relatively strong compared to how you'd expect it. So it is an unusual situation. We have interest rates going up. We have the economy still quite strong. We have labor markets still relatively strong. And all of that is producing a series of narratives that's really confusing the actual picture that we often think is so simple. I think one of the key elements in this is the fact that there's still a lot of liquidity floating around after COVID. If you look at how the markets have done since the high just before COVID, they've actually done extremely well, almost whichever market you look at. There's been no real improvement in global economies. We've had a major war come through since then. And I think the real answer is the fact that so much money was created during COVID to try and prevent economies going into recession, that money is still flowing through the market and looking for good ideas to invest in, of which AI is one.
Mm-hmm. Hi, Richard. Good morning. Nigel on this side. Richard, the last time around we chatted, you were telling us the preference, I think, to India in comparison to China. But when you're approaching equities, could you tell us where does India feature? I mean, with regard to developed markets versus emerging markets? And from the emerging market basket, India is still the preferred market for you?
Well, I think, in fact, since we talked last time, and you're always very good at catching me up on this, which is very healthy for an analyst, I think the issue is that the picture with India actually looks even better. One of the most positive factors, I think, with the Modi and Biden talking recently, this is an opportunity for India, not that they necessarily need to go under the American umbrella, but any improvement in trade, any smoothing of a relationship has got to be good for India. In their non-aligned position, obviously they're able to take advantage of discounted oil from Russia, because Russia, let's face it, is a distressed seller at the moment. And if they can develop this relationship with the US to improve relations, especially economically, I think that will be very positive. Of course, there's always a little bit of a cloud in the silver lining. The key thing, I think, is that India really has to grasp this opportunity wholly, and very often infighting will tend to restrict it. But to my mind, that's probably one of the most favorable indications that a foreign investor would have towards the Indian market at the moment.
All right. Okay. Got that, Richard. Thank you very much for giving us a quick perspective on how you're reading through the cues as we see them right now. Thanks for joining in. We do have to take a very quick break on that note. On the other side, our list of top stocks to watch this Friday morning.